Hey, how's it going, everybody? This is Mike Weber, your Los Angeles and South Bay real estate broker, here with your real estate market update for the beginning of June 2021. So if things could have gone from bad to worse in terms of how much prices are rising, they have. So once again, we find ourselves in an environment where it's almost unbelievable how much prices are rising and accelerating upwards, and how limited the supply of inventory is out there for would-be buyers that are looking to buy a home. To me, this definitely looks like massive inflation in the housing market, like we're seeing in other assets, financial assets. And of course, this is masked completely by the CPI, the way they measure CPI. They don't even use home prices in that measurement. The Fed, of course, continues to pretend that any inflation that we're experiencing is simply going to be transitory. But of course, out here on Main Street, we're seeing the very real effects of massive price inflation in housing. Now, we have seen a concerted effort by the Federal Reserve and the federal government to cause prices in housing to rise and to really limit the supply of inventory on the market. Now, we are going to see a couple of those things at least seemingly end in the next month or two, such as the forbearance, mandatory forbearance on government-backed loans, and the eviction moratorium. And some people are predicting that this is going to mean there's going to be an increase in supply that's going to be hitting the market. I read that there's around 2.1 million homeowners currently in forbearance, and in theory, those forbearances are going to come to an end, and those homeowners, of course, would have to start making those mortgage payments. And if they can't for whatever reason, at least theoretically, we might see some sort of an uptick in supply, but of course, that is yet to be seen. Conversely, the government continues to try to minimize supply and increase demand. I have read recently that the Biden administration is actually trying to chop the 1031 exchange, which is probably the best deal in terms of tax benefits or planning or avoidance, maybe in all of tax planning. And essentially, as many of you know, what that is it allows you to sell an investment property, buy a like-kind property that you replace it with, and ultimately have no taxable event. And of course, this can be done over and over again until you pass away. And then with proper estate planning, a huge amount of your asset or your wealth can be left to your heirs, a lot of it untaxed. So granted, although this will be helpful in some ways for maybe high net worth people of avoiding taxation, maybe, from the government's perspective, it's certainly going to hurt, the average person who wants to maybe get out of a certain property for whatever reason and transfer that, value into a different property that may be suitable to them, which is a very common thing that people do over their lifetime for one reason or another. For instance, maybe somebody wants to get out of multi-unit real estate in California because of the extremely tenant protective laws that have come out since COVID hit. Maybe they want to move maybe their assets to another state that they feel more comfortable that maybe will protect their interests to a better degree. Now, we're also seeing the government talking about offering purchase funds for buyers. Essentially, you just have to be a first-time buyer, which generally, I think the qualification on that is that you simply haven't bought a home in the last 2 or 3 years. I think it depends on the lender, and there's slightly different terminology for that. But essentially, it's something to that effect. And I'd imagine they're probably going to do the same thing with this new law, which means buyers would just simply get I think it's going to be $15,000 or $25,000 to purchase a home. Of course, they've been subsidizing these low interest rates in the market. And then finally, the Federal Reserve has been buying massive, obscene, unheard of amounts of mortgage-backed securities, which means they're essentially liquefying the mortgage market and allowing lenders to continue making these loans that are probably going to turn out to be risky at these ultra low interest rates that probably would not make sense in a truly free market. So that kind of gives you a sense of the climate. And really, because of that artificial climate that the government and the Federal Reserve has been creating, we're seeing this inflation in housing and of course this absolute limited supply. So let's go ahead and look at the actual data. We'll start out in the county of Los Angeles, see what's happening there for kind of a broad perspective, and then we'll move down into the South Bay where I actually live myself and just kind of see how that contrasts to what's happening in Los Angeles County as a whole. All right, so getting started here in Los Angeles County, we look and see that median prices year over year are up just under 28%, 27.9%. So, I mean, absolutely extreme growth in house prices in the county of Los Angeles. I mean, you can see if you go all the way back here 5 years, there's never been any sort of pronounced just spike in housing prices. Doesn't make any sense. I mean, this looks like a chart maybe for something, like Bitcoin or something like that. And of course, it's starting to happen with housing prices. So again, we're starting off a high base and somehow we blew up from there. And now we're at 816,000 for the median home price in Los Angeles County. Now, if we look at the inventory, this is where you really see why this is happening. There's a 42% drop compared to a year ago in the supply of inventory on the market. Now, we're already here, beginning of June, end of May, and we're here down here at 1.9 months. This is, again, the lowest that it's been for at least 13 years. And, I mean, you go back over to the previous year, even last year, and you see we were at 3.3 months supply, and now here we are, end of May, 1.9 months. So you can see, I mean, it's like almost like inventory just disappeared. It fell off a cliff. So it's going to be interesting to see how much of that is because of people that are in forbearance, how much of that is because property owners can't sell their property because they have a tenant in there that's not paying rent, that they can't evict, so on and so forth. And so, we're going to probably see some of this stuff start to unpack itself in the next couple months. Now, if we look at closed sales, as we'd expect, they're up 100% compared to a year ago, which really just symbolizes that essentially anything that's on the market, if it's, saleable and it's priced fairly within reason, it's going to sell almost immediately. I haven't seen this sort of competition ever since I've been in the real estate business. I mean, everything, it's like 50, 100,000, 150,000, 200,000 over asking. So if you're a buyer out there, I mean, you got to really, really be prepared, really know what you're doing, be extremely reasonable in what you're looking for. Of course, unless you're, that top 5% or 95th percentile and above type of buyer, that has a ton of expendable income, can pay way, way, way over asking, doesn't need an appraisal, maybe not even a loan because you're a cash buyer, etc. Now, if we look at the South Bay beach cities, again, we see the same trend. We're up 27%. So, I mean, this is across the board. It's looking like pretty much just all throughout the county of Los Angeles. Huge price growth. Again, we're up to $913,000 for the median home price. If we look at the supply of inventory in the South Bay, same trend, almost exactly the same, in fact, as the county of Los Angeles. We're down 40% year over year at just 1.6 months. It looks like we did actually hit this 1.6 in December of 2017. December, obviously, is when we're going to have the lowest inventory. It's holidays, Christmas. Nobody wants to have their home on the market, or many people don't want to have their home on the market. And here we are in the middle of peak selling season, and we're experiencing inventory as though we are in the slowest part of the year. And here we are, if we look at closed sales, we are up 109% compared to a year ago. Of course, that makes sense. We were in lockdown a year ago. A lot of things weren't really happening at that point. So we could see why we would have such an increase. But of course, even so, really part of the cause of that is really that just anything is on the market is sold. And that's why conversely, we see that there's really no inventory out there. So I hope this information was useful. If I can help you with your home buying needs, or you're looking to sell a home and really make sure that you maximize the final sales price of the property, don't hesitate to reach out. I'm definitely here to help. If you haven't already, go ahead and click the thumbs up button. If you're on YouTube, go ahead and subscribe, and definitely let me know what you think is going to happen over these next couple months as we see some of these government-sponsored programs start to end or unwind. And appreciate you guys watching, and we'll see you on the next video.